The idea of bank notes can be best understood by tracing the history of the banking practices of the Bank of Amsterdam, the Bank of Hamburg and Stockholm's Banko, or the Bank of Stockholm. Bank notes were first used to create credit to facilitate trade and manufacturing and fund wars. When issued irresponsibly, bank credits can lead to a general economic crisis, currency depreciation, and capital scarcity. During the 17th and 18th centuries, many European countries took to modern banking practices to organize capital based not merely on the accumulation or allocation of coins or specie, but also through the creation of bank credit. The northern European cities of Amsterdam, Hamburg, and Stockholm took an early lead in this direction. Before we start, we need to understand some important terms and ideas related to modern banking practices. Banks can create credit by issuing notes not backed by coins or bullion. Even before the advent of modern banking, monarchs in many countries resorted to these measures by debasing their currencies, which led to the circulation of coins below their standard value in weight. Later, banks started providing loans to governments against their pledge of future revenues, taxes, or government assets. Banks also did this by frequently transferring the excess notes of the issue department to the banking department and showing these excess notes in the bank books as assets. Banks succeeded in this mode of credit creation until the depreciation of their currency led to a severe financial crisis. Bank credits, such as those of the Bank of Venice and the Bank of Amsterdam, were for many years at a premium. This meant that the value of papers certifying the deposit of coins was above the value of actual coins in circulation. This was because of two reasons. First, these banks issued credits to the extent of deposits. Second, the coins deposited with the bank were of better quality than the degraded and frequently used coins in circulation. Bank credits certifying the deposit carry a premium when the reserves are almost equal to bank credits and are in a better condition than the current coins. Conversely, they are at a discount when the reserves are less than bank notes or credits of deposits in circulation, and even the higher quality of coins or a better standard of bullion cannot account for the deficit. Legal tender broadly refers to the act of the government to enforce the use of a particular currency, whether debased or at par with the real value. It simply means that no individual or organization within the state jurisdiction can refuse to accept notes deemed legal tender. Banks were required to replenish and maintain their reserves with coins or bullion for three main reasons. First, to honor their pledge to the bearer of bank credit by converting their notes to coins or specie. Second, to stop the devaluation of bank notes or currency and prevent bank customers from coming back to the bank to get the notes exchanged for coins in great numbers. Third, to maintain a stable exchange rate of the local currency in the international money market. Apart from these factors, there are ethical issues involved in keeping bank accounts proper. Discounting the bills of exchange was one of the ways through which these early modern banks made money to run the business. It works this way. Peter buys 10 bicycles from George for his business. George sends him a bill of £100 to be paid after 90 days or 3 months in silver coins. Peter writes accepted on the bill, signs it, and sends it back to George. George, who needs money for a payment after 1 month, can use this bill for the payment. He may also go to a bank and get it discounted. The bank will keep the bill and charge a discount at a pre-decided rate for converting the bill into coins before maturity. George will bear the bank discount to get the money for an immediate payment. Finally, bank credit, bank notes, bank paper, bank money, notes current, paper currency, and other such terms broadly refer to the notes issued by banks. Specie refers to money in coins other than bank notes. Bank reserves could be in the form of securities, coins, bullion, government bonds, and other forms of commercial papers. Highly illiquid assets such as land and public buildings have rarely been kept as bank reserves, as they make the convertibility of bank notes extremely difficult. The issuance of notes against the pledge of such illiquid assets was used during the revolutionary days of France, and later in Russia. At the end of the 16th century, Amsterdam was a major hub for international trade. The city attracted foreign merchants due to its extensive supply of goods brought in from Europe and the East Indies. The influx of precious metals and the Dutch shipping services further solidified the city's position in global commerce. The standard coin in use was the Netherlands riksdaler. The city also received coins from the Dutch provinces and other countries. These coins were often clipped and worn out, due to which they were circulated below the legal weight. This led to a lot of confusion in both domestic trade and foreign exchange. The government first tried to deal with the situation by taking action against money exchangers and deposit bankers. In 1608, the premium on certain heavy coins rose to 9%. The city's merchants also faced problems in settling bills of exchange due to the uncertainty of currency value. This led to the prohibition of deposit holding, the practice of receiving and paying out money for another person, and even transferring money by writing or word of mouth. The use of assignments or bills of exchange for making payments was also forbidden. Some of these provisions were moderated a fortnight later after appeals from merchants. The issue was finally resolved after the city ordinance of the 31st of January, 1609 created the Amsterdamsche Wisselbank, or exchange bank, later known as the Bank of Amsterdam. The provisions of the ordinance allowed individuals to deposit bullion or money and withdraw the same at any time. However, deposits had to be at least 300 gulden or guilders and include no more than 3% silver. The bank was required to ensure deposits payable on demand and sell any kind of coins demanded of it. Bills of exchange of 600 gulden or more were required to be paid only through the bank by transfer of deposits or credits. This policy standardized the value of exchange bills. Over time, the transferable deposits came to be known as bank money. The bank accepted and dispensed deposits valued in full weight money to ensure that the value of credit on its books mirrored that of good coin. City merchants were required to maintain accounts with the bank to manage their foreign transactions. This diverted their money in the form of coins into the bank's vaults. The value of credit sometimes differed from the average worth of the commonly used degraded currency, but it ultimately represented the true value of the coins held in its vaults. The gulden of the bank was a fixed part of the heavy Netherlands riksdaler of silver, which was the bank specie. In 1622, the gulden bore a premium of 4% over the light coins in circulation. Later, when the heavy riksdalers became scarce, other coins were received as bank specie at a fixed rate measured in gulden. The bank kept its coins idle and did not use its credit for any further use. It met its expenses from the bank charges on deposits. The bank began lending money on the deposited coins in 1683. This bank money lent to the bank's depositors was not far from the amount of specie in heavy coins. Under this arrangement, the depositor received a receipt certifying his right to withdraw his deposit within 6 months. The deposit would become the bank's property if the coins were not withdrawn or the transaction was not renewed after the end of the 6-month period. The right of the owner of the bank money to demand its redemption in coins ended during the 18th century. This made the notes of the Bank of Amsterdam inconvertible, and from this time the bank money was converted to specie and vice versa at fixed rates through outside agents. Charles Dunbar in his chapters on the theory and history of banking argues that the inconvertibility of the bank money was a natural outcome of the practice of providing loans against bank money other than the bankable coins, the heavy riksdalers. The bank's deposits were said to be intact until 1672. During the French invasion of Utrecht that year, the bank's depositors rushed to withdraw their funds from the bank. Despite the panic, the bank upheld its founding principle and was able to meet every demand, demonstrating the integrity and stability of the institution as all deposits were kept intact until that time. It was believed that the Bank of Amsterdam had a great amount of money in its vaults as the city received great wealth from its colonies in different parts of the world. The Netherlands was the richest country in the world in the 17th century in terms of per capita income. In 1775, Adam Smith estimated that the amount of specie in the bank's vaults was 33 million gulden or guilders. Smith's estimate was well short of previous estimates, which ranged from 300 million gulden to 900 million gulden. The secrecy of the bank's actual standing rested on the administrative setup of the bank. The members of the Board of Commissioners were appointed by the city government. They were sworn to obey the government's authority. The accountants and clerks were also sworn to strict secrecy even after their employment with the bank ended. The real power was not with the bank but with the city authorities. From time to time, there were doubts about the actual specie held by the bank, but these doubts were brushed aside as unimportant. In the winter of 1789 and 1790, the premium of bank money fell below 2%. It fell to 0% in August 1790. The bank money was at 2% discount 3 months later. Suspicion rose among the public as the Bank of Amsterdam was not buying back its bank money on a large scale to protect its credit. To do this, it needed real coins or gold and silver bullion, as taking back bank credits from the market would have increased the value of bank money and restored its premium. The bank instead offered to receive silver and pay it out at a new rate. The offer, which was seen as an attempt to settle debts at a discount, was rejected. The bank then began issuing coins to its agents for bank money, but stopped this operation in February 1791, thereby finally acknowledging its failure. In 1795, during the French occupation of Amsterdam, the bank cellars were found empty and it was revealed that the bank had advanced 11 million florins to the East India Company and the provinces of Holland and West Friesland. This breach of trust, coupled with its inability to recover the funds, caused the bank's credit to drop to 16% below the current coin value. As a result, the bank assigned its claims against the company and the states to its depositors. In 1795 and 1796, between 7 and 8 million gulden were raised through loans to decrease the city's debt to the bank and save the bank. However, attempts to revive business activities were largely unsuccessful. Many more unsuccessful attempts were made to revive the bank in the next 2 decades. The Bank of Amsterdam was eventually closed down after a royal decree on December 19, 1819. Meanwhile, after the occupation of the Dutch Republic in 1795, the French transformed the country into a modern unitary state, the Batavian Republic. This republic ended in 1806 when Napoleon's brother Louis Napoleon became the first king of the Kingdom of Holland. The Bank of the Netherlands, or de Nederlandsche Bank, was established in 1814 after it became clear that the Bank of Amsterdam could not be revived. From 1814 to 1900, the Nederlandsche Bank was the only bank of issue in Holland. In 1619, the Bank of Hamburg was established to address financial issues similar to those that plagued Amsterdam, particularly the circulation of debased coins. The bank's primary function was to accept these coins and replace them with bank credits that held a stable and positive value. The bank initially accepted only the standard silver Rijksdollars of the German Empire. The government later introduced a lighter Rijksdollar, which led to the accumulation of these fraudulent coins in the bank's vaults. The situation escalated into confusion, resulting in the temporary closure of the bank. In 1770, a new monetary basis called Mark Banko was established as a compromise between standard and debased coins. This Mark Banko served as the unit of account for settlements in banking. Deposits of silver, whether in coin or bullion, were accepted by weight, with credits issued based on Mark Banko, which was 59% of a metrical pound of silver of high purity. The bank charged a fee for determining the quality of all deposits. The value of bank money consistently exceeded that of circulating coins by 20 to 25% for an extended period. Only Hamburg-based merchants had accounts with the bank. Its loan office provided advances amounting to 3/4 of the value of pledged assets, which could include gold, silver or jewels. A paper published in 2009 claims that as early as 1619, the Bank of Hamburg was divided into 2 departments, one for exchange and one for loans. The paper claims that the Bank of Hamburg seems to be the inspiration for Stockholms Banko for the separation of the bank's lending and deposit operations. The Bank of Hamburg did not provide loans or issue notes beyond the amount of coin and bullion on deposit. It adhered to this principle so faithfully that when the French troops took possession of the bank on November 5, 1813, they found 7,506,956 silver marks in its coffers against the liabilities of 7,489,343 marks. The French took a large part of the bank's treasures. When Hamburg gained freedom in 1814, the bank resumed its business with its credit intact. The thefts of Napoleon's forces were paid for in 1816 by a transfer of securities by France. The bank survived the financial crisis of 1857 but went into a terminal decline after the establishment of the new German monetary system in 1873. The system required the bank to liquidate its accounts in fine silver and adopt the gold standard. Consequently, the ancient Bank of Hamburg was required to eliminate its bar silver standard and its mark Banko system. In 1875, the new coinage laws eventually led to the end of the bank, which had for over 2.5 centuries operated on the principles of the Bank of Venice and the Bank of Amsterdam. At the start of the 20th century, Sweden, Norway, and Denmark had a uniform currency under the Scandinavian monetary system. This system was based on the gold standard, with the crown or krona as the unit of currency. Stockholm's Banko, or the Bank of Stockholm, was founded in 1656 by Johan Palmstruck, a Riga-born Dutchman. Palmstruck, the founder of the bank, is credited with the first use of bank bills as money, not backed by the coin reserve. Palmstruck, a profit-oriented financier, resorted to aggressive credit provision and allowed the bank's reserve ratios to drop below those of the banks of Amsterdam and Hamburg. The Swedish economist Eli Philip Heckscher notes that Palmstruck convinced the government of Sweden about the profits that can be made from Lombard lending practices of the Bank of Amsterdam. Like the Bank of Hamburg, Stockholm's Banko chose to separate its banking business into lending and exchange operations. In 1652, Palmstruck presented his first proposal for the establishment of a bank. Palmstruck explained in that paper that the Bank of Amsterdam supported the city's commerce and industry by transferring money from the exchange bank to the Lombard or lending bank. This allowed the bank to earn interest on barren reserves and left the lending bank with adequate funds that could be lent to craftsmen and merchants. It is important to note here that the Bank of Hamburg did not provide loans beyond its reserves and kept its books transparent by dividing its banking operations into two departments. The Bank of Amsterdam, which took to the so-called Lombard lending for the creation of credit, kept its accounts hidden. The Italian bankers, who are credited with the invention of this method of lending, kept their business accounts secret. It is also written about the bankers of Florence that they kept libri segreti or confidential ledgers for their lending business. The Italians, like the Dutch, successfully used this method of lending money. But Stockholm's Banko, which resorted to Lombard lending but kept its books transparent, began issuing notes beyond its reserves to help its merchants and businesses and face serious troubles. The Bank of England faced a similar situation in 1857 when the British government had to suspend the Bank Charter Act of 1844 to help the bank sail through the crisis. The Act of 1844 provided for the separation of the Bank of England into issue and banking departments to bring transparency in its lending business. Stockholm's Banko's first banknote was issued in 1661. Later, it began lending on a large scale without maintaining adequate reserves. Its operation stopped in 1664 after the bank refused requests to redeem its notes. Palmstruck was imprisoned and the bank's license was handed to the Bank of Sweden or the Riksbank in 1668. The administration of this public institution was under the charge of a commissioner chosen by the country's parliament. The Riksbank ventured into lending money and faced a near disaster in 1752 due to the risks associated with this expansion. The bank became the country's central bank in the late 19th century and is currently the oldest surviving central bank in the world.